Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here Friday, the 8th of November, about an hour before the close. And on today's show, the party's going, but is it late? Are the cops at the door? Or do we still have time to tap another keg? That's the big question. And we're going to dive into that today on today's show and give you some ideas and give you a perspective on the cycles and the levels. And let's see what how it all weighs out. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
Tired, I'm sure. Everybody's tired. It's been a long week, long
It felt like,
hours.
yeah, it feels like, like at the end of a party, right? It's like kind of like wondering what the hangover is going to be like.
Yeah.
It was a
And
busy week, no question about it, right?
absolutely, it was busy, and I think that's the key question, right? Do we get the party on, or is it better to leave? Better
Right.
to leave the party before it gets broken up by the cops. So you can see the SPX there going right up into that half square,
That's 315 degrees up from the 22 October low,
where
right
this
there.
all, yeah, where this whole move started. Yep.
Yep, right there. And we'll look at a little bit of a couple of different perspectives from, looking at the cash here and the futures market. But let's take a look at this first. We've been following this. This area was really interesting because I don't think anybody knew what was going on. Luckily, we had the levels. We were watching to see how price would end up landing, and everything worked out pretty well. I'm looking at squares visit placed in October, so I just wanted to get the long-term perspective. When we get these really hard moves, it's good to always go back and catch your breath and see where things are. You can see how the July high came in exactly at 270 degrees. So that was a pretty good hit, I would say. And on the futures chart, you can even see these things better. We tapped it again in August. And then in September, we got on top of it. And we basically, stayed on top, made higher lows and pushed up coming into this. Now, this is based on the October 2022 lows.
Hmm.
And then we have the other marker that we had was this point which got us the 90
The 90 by
square.
90. Yep.
Mhm. So when we do that, this 5673 level becomes clear, like why we have it on the chart.
Mm-hmm.
And you can see we got on top of it, stayed on top, bounced, came back higher low, and then eventually this week we really took off. Now, during this period, we were trying to figure out, we had a number of cycles expire here, had some cycles here, had some cycles expire right here at the 180-degree mark.
Mm-hmm.
Now, the important thing is when these times come in and the price has let's say, a very conservative pullback, you want to kind of wonder like what's going to happen next. Like here, we were looking to see if we would get a lower high and then turn down, only because we had these really good counts going into a high, just like we did here. Like here, the move was a little bit, let's say, stronger than usual, like more than 50% of the square. You can see we went down to almost three-quarters of the square. So we're always watching to see how price is moving within the square. And remember, from the October low that we just looked at, we had the 6018 being the top of that 315-degree level. And when we go to the April low, it's right there, not too far, right? The 50%
Mm-hmm.
of these set of squares coming off the April low, 90 is there at the 5673. And the 135 is a little bit above 6018 for all
Yeah.
practical
Yep.
purposes. We're right there. So 6030. So it's right there. So
Mm-hmm.
that's one thing to notice as far as prices go. And then we'd want to go to see how this 90-degree move started. This is the one we were watching last because we wanted to see if prices could clear that or not. And that was like the last part, right? And I think the last couple of weeks we were talking about this 5673.
Mm-hmm.
If we can hold above that, then we're okay. We're looking to see if we get lower high or we're going to break through. We didn't get a lower high. We broke through nicely. I mean, with
On a
some
gap.
on a gap, lots of power.
Yep.
And well, then you just sit back and you wait, let the market stop wherever it wants to with that kind of power behind it. So if we take the last leg, you can see 45 degrees, which would be a reasonable target to expect on a 90-degree square. It ends up becoming around, let's say, 60-50. So 60-30 to 60-50 comes up on a couple of squares, and 60-18, let's say 60-20, just round it up from the October low. So you can see 20 to 50, that 20-point range seems like a pretty sweet spot for the market. All right. Is
Hmm.
that good? Okay. Now,
Absolutely.
to the downside from here, we really don't have anything till 58-48. I don't have anything in here. And you can see that that's why we went right into that next level, how we just gap. There was nothing there. But yeah, once
Hmm.
you get past this 58-48, at least I didn't have it. You don't see a bunch of levels here, but
Hmm.
where you do see a number of levels below, right? And
Yes.
and with good reason. So you can see how this stopped. The 56.73 stopped here. The stopped the market here. Check back here. So a lot of all of these levels play a role. And to the upside, I really didn't have anything till we get to this 60-20 to 60-50 range. So let me change that to 60-20 so it's easy to remember. Okay. And so that's what I have for the price for the SPX for the cash. And I'll get into how to kind of wrap this up and what to expect next week. But I think for the cash next week, I would definitely bracket out 60-20 to 60-50, see if price can get there. As it is, where I would say this is close enough for the type of work we do. Uh,
Right.
we and the rest of it is really about wanting to see how price behaves. Now we had a 90 count here. We went 90 low to low, and now that we're above it, we might be running on a solar count. And if you do that, we're running 90 degrees right into like yesterday, today, plus or
Hmm.
minus 1 day. That'll get us, well, that's still within the boundaries of plus or minus 1 day. So we're still okay. So we do have the counts coming in here. We have 144 from April low.
Yep.
We did blow up into a good price zone, and we do have some timing counts coming into it. So we're
Hmm.
watching to see for next week using the cash. We're looking to see if the 60-20, 60-50 area, if we can take it out or if we're going to get stuck under it. If you get
Hmm.
stuck under it, obviously any consolidation above the structural support, which is 58.78, it's obviously super bullish, super firm. And any amount of time we put up above that structural support ends up becoming, it's kind of establishing value at that level. So it's positive. Now, if we get down to 58.48, come up and tap the degree level, 58.40, 48, anywhere in here, it's still bullish. There's no question about it.
Hmm.
So for this to really start to do anything weak, we'd have to get under this um, 90-degree square at
Hmm.
58.48. The other scenario is we can continue to gap. We can do another gap above 60-20 and gap above and get above 60-50. Then we'll have to deal to see how we're going to deal with that if we're going to get up into this 6200 level. Okay.
Hmm.
If we do any of that, we'll catch all of that on the next midweek update, which we do normally Tuesday night and posted Tuesday night or
Early
early
Wednesday. Hmm.
Wednesday. All right. So that's the cash. That's what's happening. We're going to look at the weekly charts. There's a couple of really interesting things to look at there. Here's the exact same,
Wow.
exact same chart, exact same placement for the square that we started out on the SPX. And this is on the futures chart. So here we have 540 by 315 squaring out right there. And that's a square. There's no talking around it. And here, what I would like to see is if we can hold above this 60.26. And that's really the level here that we have to look at. There it is. And we'll watch it. We'll watch it next week. So you guys have numbers for next week for the cash market. And here's the futures. Really one number, 60.26. Can we get above it and hold above? Or are we going to consolidate between 58.92 and 60.26. Like obviously consolidating above in this bracket is bullish. Uh, I mean, the shape and the tone and all of that, the pattern that's going to emerge out of that consolidation will tell us the rest of the story. But for now, the story is we gap right up into a key time and price point, you know,
Hmm.
and that's the important thing. You saw how close the cash came to price. The time, that's a calendar chart, but this is the regular trading day count. So the trading day count is 540. Price is there. Calendar, we would have the same time count. So they're both squaring out from the October low. All right. And the short term things we talked about on the cash, they're also in play on the futures chart. So I don't want to get into that too much. Here's the D's contract without the rollover gap. I just wanted to, get a clean chart. Here, I think the important thing is to really see where, how strong are we and what would it take for it to sort of flip around or turn around. And in that case, obviously 58.92, the level we've been watching from this, it's only a quarter square away. So if you notice, the low here is a quarter square from this low. I'm not a quarter, 1/8 from this low. So moving it down will move everything down a quarter. So no big deal. The 90 would have been up here earlier. I'll move it and show you guys. But for now, long as it's above 58.92, before hitting critical resistance, I think the market is in a good strong spot. If you want to look at resistance coming off the August lows, this area here, 60.75, seems interesting. That's a quarter of a square. Right, Ben?
Hmm.
And the only other level we would really care about would be to come off the low here, the last run. And if you really want to complete this in grand style, I would say this 60.82, that would be the number where price is really going to meet resistance on the D's contract. Okay.
Hmm.
And we'll leave it at that. So we have some timing. Price has a little bit more leeway. Cash is, very close to it. When I say close, we're 10 to 20 points within there. So, and you know how fast we can cover 20 points. So,
Oh my God, yeah.
that could be the opening range. So it's not much. We're very close. And here we're hanging around 60.30. So 60, 50 more points and we're there. So watch that. To the downside, really, I mean, any correction here is just fine, long as we can hold above 58.92. And I'm sorry, 58.92. Above that, we're in good shape. We talk about the one by one often, and you can see we're, blowing that away. We're in really good shape. And what else can I say? Two by ones are, blowing those away. So market is very strong. And let it run up into the resistance up until it gets there. Like I said, we're watching where the pullbacks and counter trends are going to settle. And obviously, structural support is going to be important, which anybody can check on their charts. Square levels, we have 58.92 is the one you got to watch. And you're going to cover the NASDAQ, so we will get that side of it, right?
Sure.
Which was a kind of a historic week for NASDAQ, right?
Finally made a new high.
So here's the Dow chart we looked at midweek and well, every week. Coming off of the October low, we finally reached the target. I mean, I've had this in here for months, I think, 44,300. And we just about tapped it today. I mean, visually, we tapped it, right? And the high today was 44,300. So there you go. How do you like that match?
Nice.
Pretty good. Now, if it's going to be nice, if we can hold it, see what happens here.
Hmm.
So I'm going to move this buffer over here because I think that's really the critical level now. It starts here. We have a 50% of the square going up into 44,848. A lot of eights in here. Let's see. So Dow already hit resistance. This has been a long-term target. I think I got it from a weekly chart. I can't remember where I got that exactly, but anyway, it's on here. It's on the board for a reason.
Hmm.
And you can see I don't have any other numbers. They're pretty far apart. I had 41,348 down here, which had held for a couple of 3 months. And then Now here's a second set at 44,300. So we're very close again. So what happened today? This week, we got very close to critical numbers, some like the Dow hitting it exactly. And that means something, right?
Sure does.
Because we don't have those levels get hit every week. So we got to pay attention. All right, let's quickly take a look at the couple of other charts. Give me 1 second. So here's the 30-minute chart, which we like to cover every week, just for show and tell.
So harmonic, man. Look at all those levels it respects.
This contract's been really good, but they've always been good, right?
Hmm.
So anyway, last week when we were sitting around 57.20, if you guys go back and if you're watching every week, we're good. Otherwise, go check the tapes, and we talked about how important this 57.20 is and how that's pretty much rock solid support. And to watch this 57.40 level, because that's the zone we were watching for support, and if we can come off of that, market's going to be in pretty good shape. We were looking for a test of all of our trading, we kind of go square by square. So once it cleared 57.40, we were waiting to see what would happen at the full square, important full square, because this was 180 degrees up. And we stalled, tiny little correction, went back, checked back here. This is what we talk about, getting above, holding above. So here we go, holding above in reverse, and blew right through everything eventually to get to the upper end of our target at 270 degrees up, full square at 59.92. And you can see this 59.02, if you guys remember, it's been a level for a long time, weeks and weeks. And I had 59.48 up here. You can see how and that's been there for a while also. But we went up there, tapped, even with this big pressure, right? Look how it held for a little while, less than a day, but fine. But the check back came to 59.02, held it there, ran back up. And here again, this is what we talk about holding above as a really good example of breaking through, check back. And then we kind of, moved up into testing 59.92. You can see had to spend a couple of hours to grind through it, got above into the buffer zone. Here's our check back. To me, this is identical to this kind of a check back, right? These are all very similar. So here, there, and here. And then here we are, moving higher. And if you guys can see that line, the horizontal line there is exactly a quarter of the square, the next level, which is great. I don't have any lines drawn up. I would love to see this thing go all the way to 360, which is up in 51, 61, 75. 50% of the square would be 60.84 basis the 30-minute. So those are the key levels to watch. So here, I think for the next week, 60.84 to the upside. See if we can get there. Obviously, the high we put in today is going to count. Quarter square, we'll have to watch that 60.39 and 59.92. So
Yeah, on my daily, I got 61.10 as a half square target up there. So
yeah, it's right in there.
It's in the neighborhood. Yep.
Mm-hmm. And the key, yeah, that's right. So upside, it seems like we have a little left. We're not sure how it's going to get there. Are we going to get there Sunday night, Monday, Tuesday? You know what I mean? Or are we going to do a decent correction or some kind of a consolidation and then run up into tap that? Well, while we wait for that, really watch this 59.92. Now we looked at a couple of squares that were coming out. We talked about the timing that's coming in. So let's not forget that. So the way we're going to know if any of those timing things got a hold would be to watch watch price levels. So for now, we're watching this 59.92. And if we somehow get through it and get stuck below, then something is up. It's possible. There's a high probability that one of the cycles, caught some traction and we're correcting. But long as we're above this, especially above, the 60.16 level, market's super strong. I wouldn't get in the way till it gets into some major resistance, which those levels we already talked about. So I think We're okay on that side, right?
Hmm.
All right. The other chart I want to talk about is this one, which we've been kind of peeking at every week
And
with good reason.
look how great the edge of that circle catching the fast move is.
Man, it's very impressive. That's why I can't wait to see how all this is going to end. When
I,
the
I mean, and next week, if we don't accelerate up next week, it's going to fall out.
yes, yes, yes. It's I mean, this is about as good as a circle. A sort of parabolic move is going to manifest
Right,
in the long term. I haven't seen one of these in a while.
right, right.
And you can see how beautifully it's done. And I know I've been talking about this little gray dotted line saying, hey, this is a geometric line. Maybe we'll go up and tap that like, a kiss from below when the trend line's broken, and pretty close there, Ben. Look at that.
Yeah, yeah.
And 5950 was one level that I was watching. So we definitely hit that. And the other level, I had an extra runoff buffer, if we had no brakes in case like the
Hmm.
truck's coming down the hill. And the buffer zone was, I mean, this is basically the weekly, okay? So don't get it mixed up with all the other 30-minute numbers. So
Hmm.
basically the weekly 6115 to 6150, right? That's that zone right there.
If it's with my daily 6110 right there.
Okay. Yeah. Yeah, exactly. We're right in there. And you can
Hmm.
see that's pretty much, I mean, it's beautiful is it's happening exactly when the circle is vertical. I mean, the flat part, right?
Yeah.
The edge is vertical. And of course we have 108 weeks coming off the 22 low that we've been looking at,
And that's
measuring
next
all.
week, isn't it?
Yes. Yes. It's
Wow.
next week. So it's a big week. I mean, it was
And
kind of
guess
a
what
big week.
else? Guess what else we have next week?
Oh, Rebel Yell.
Yeah, we got the next Rebel Yell
Right. We
on
have another
Wednesday,
Rebel Yell cycle. When is that? Towards the end or the beginning?
13th.
13th. All right. So not much to say about that. Right in the smack in the middle of all everything.
Exact. Right in the middle.
All right. So we're up above 144, but that's okay. We're looking at, I mean, we can look at it from a couple other directions, but the eighth of a square is right about it. So, we're very close. Whatever said and done, we're right in here. And on the weekly charts, I let time sort of lead the way. The higher the time frames, it's better to let the time lead. Where
Hmm.
lower time frames, the better to let price lead. That's kind of how I look at it, or we look at it.
Hmm.
So here we have 108 weeks coming up, kind of important. And you guys know we've been talking about it. So let's see how it plays out. For now, nothing to do but other than to watch. If you want to prepare for that, we're going to watch those lower time frames, lower squares, the daily stuff we talked about, the 30-minute stuff we talked about. If you really want to get into the canary level, you know. But that's it. This is kind of what I wanted to talk to you guys about. Anything you want to add there, Ben?
No, the timing is beautiful on that chart.
Mm-hmm.
And the way that it shows you how good the circle is, because as it hits the edge, it's accelerating, which is exactly what the edge is supposed to do.
Yeah, I mean, you can't even, you can't pay for that kind of stuff.
No, no,
I
no,
mean,
no.
look how beautiful that was, right? It actually pulled back a little bit and then go.
And then went.
And
And the crazy thing is, if it still holds next week, it's going to be vertical.
yeah, then it's going to be a little bit blistering. Let's see how.
Right. Right. I don't have any idea what could cause that, but the possibility is there.
Yeah. I mean, looking at the 90s that pushed into this and all of it, it looks like we're doing pretty well and we could have a completion here of some
Yeah.
type.
Yep.
But this is purely geometry, right? We're not really looking at anything else. We're looking at circles, lines, looking at it and time. Uh,
Yep.
we're by next week we're in the zone. So next week we'll look at a little bit closer, like what's happening. Here we thought something might happen because of price. And we did fall out of the square, but on the lower levels, it recovered right away. So there was really nothing to chase. All
Right.
right. Only other thing I wanted to share is I didn't want this to be gone without some kind of attention.
Hmm.
Is this ABCD? Here's our target box for the Gartley. There's a nice Gartley here, beautiful Gartley. So here's the ABCD is sort of the ideal Gartley extension. If you add a couple of ratios to it, we get up into the 6073 to 6093. Ideally, you want price to kind of finish up, in this box. And boy, we're not bad, right?
Not bad at all.
So today we definitely hit it and penetrated it. So 60-13 or so was the level. And we got above it, but we're kind of still in the box. So there's a
Sure.
lot of what's that been?
I know I said sure. It's legit. It's in the box.
Well, yeah, this is legit because you can only draw so many. Actually, only one.
Right,
Only one.
right, right, right.
Only one of these, and you have to pay attention to them. Um, we have 90 degrees, solar degrees coming off of that. It's a little bit off, but if you go a little bit more,
Hmm.
we can get that into. I mean, the next really the count is 96, and
It's close.
yeah, so that puts us right on the 11th, which is pretty close to your some of these other dates, right?
Yeah, yeah.
11, and this will make it a 36. So we have a 36, we have a 96.
Hmm.
So we have a lot of counts that are resonating with some of these squares that we use. Yeah, that's it. I just want you guys, I know there's a lot of people that follow Gartley's. So, when you have them, might as well talk about them. So,
Hmm.
all right, let's move on to the weekly charts.
That was a good review.
Thanks. Let's take a look at man, it's hard to wrap everything together, when all the parts are moving.
But the thing I liked about it, and when I'm doing my own work, I like the same stuff, is you're doing it with multiple charts, multiple time frames, and multiple indices like SPX, ES, December contract, and you're getting this confluence.
Mhm.
And whenever that happens, it's significant, right? It's
Right.
you need to pay attention.
Yes. And the Dow, hitting the price level
Yeah.
there, long term levels. So
Hmm.
here's the weekly cash coming from, well, a little bit different kind of a low. This is 2009 low. And I just wanted to see how things lined up overall.
Hmm. Hmm.
Just to say, not to scare anybody, but from that low, which is sort of the big low, right? Where everything sort of the QE and everything started.
All that started. Yep.
Everything started 360-degree. Full completion would be at 64.41, 64.42. It
Hmm.
doesn't mean we have to hit that on this run. Obviously, we could correct and make one more, run up into that. But
Hmm.
just to keep that in mind, it's all, I'm always trying to remind myself where things are. And this square has worked really well. And the place we were really watching was this 315-degree level. And you can see, yeah, it's a weekly, but you can see how the pullback landed right there.
Sure.
We talk about 50% levels being important, and this is why we landed there, bounced, and here we go. How much further do we go? Well, we talked about all of that before, so I think we're good.
Hmm.
Here's a normal weekly chart that we look at. This is the futures chart weekly. Looking at here's another. Here's a same ABCD, but this is coming off the futures, and the target for that looks like 61.37. Okay.
Hmm.
And I have 6,400 as the ultimate, like the big time target here. If we can get there, because that'll be 180 degrees up from the 22 low. All right.
Sure.
So these are all key levels, which tells you, yeah, from here, there, we could have room to run. But remember, it could run on a different harmonic. It could be running on 144, for example, right?
Hmm.
So that's why we don't, just because we look at a lot of charts, I would stick with whatever comments that roll out of my mouth, just because it's easier to track it this way. So I like the 144 because
Look
we
at
have the
that.
timing
Yeah, you
coming
got
in.
timing.
Yep.
Sure.
And this is where the circle is, that circle we just looked at is working off this square. So
Hmm.
let's watch what happens. This is still fully legit for a square because we're up at the quarter level.
Hmm.
And that's it for the S&P and all the indices that we look at. Let's move on to some other markets. And I know you're going to cover the NASDAQ, so we're good there.
Yep, I'll cover them.
And if you guys like our work, please remember to hit the like button, hit the share and the alerts, and subscribe, right? Subscribe.
Yeah.
Because we're dropping these things midweek. So if you guys want to catch those, hit the alert so you'll know when it's up. I left the square here because Ben and I were talking about bonds. We were talking about how far could it go,
Yeah.
and I think and this is midweek, I think, and
Hmm.
I think the conversation was more or less, well, if we take out this 45, we're probably going to go up and test the April lows. And if we get that far, we're probably going to take it out, and put in a new low. So not a new low for bonds, but a new low past the April low.
Mm-hmm.
So we'll see how that goes. Remember the 119.5 level is still in play. And the other thing we talked about with this 45-degree being a normal sort of a place for the bonds to find some support, and looks like it did. A lot of volatility. You can see all the movement here.
Mm-hmm.
But the other thing to notice is we also broke this trend line.
Yeah, we
We
did.
talked about it last week in midweek. So we broke the trend line, and we want to see, you can see how we broke it. Came, every time
Tested.
yeah, every time we tested, we're making lower highs,
Mm-hmm.
and we're making lower lows. So now we have inside bar. We broke to the upside. Let's see what happens up here. But yeah, we found some support. Yes, we can get some kind of a counter trend before moving lower. Noticing also we have 45-day count coming in here, a little bit of a square. We're still looking at bonds to be weak below 19 and a half, and much weaker below 16 and a half. So we'll see how that works out. Anything you want to add to bonds there?
Just that, our stance hasn't changed on them. This bounce, could be a nice setup for another sell.
Yeah, no, the stance hasn't changed, especially since we
You
got
look at the
below this one.
weekly.
Yeah, weekly.
Right.
Yeah. Weekly got below this 144. And you can see how we held this at 108.07 level up here. We couldn't really get above that. We covered all of this in the old tapes. And once we came down to 144, we just slipped through it like nothing was even there.
Right.
Which could mean we're slipping into a 180. That's possible. So we can look at that next time. But again, we broke the trend line, and you can see every time we broke the trend line prior, we had some kind of a move down. So here we just broke it. We're one week into the new one. This 114 is pretty decent support. I've had this level. I think I've had this for a few months, if not a few years. So
right.
So that's been support, and it'll probably continue to be a little bit of support. So once we break that is really, I think, when the trouble is going to start. So let's watch that. In the meantime, this 144 is almost acting as if price is acting as if that's mean reversion level. So we're wrapping around that. Let's see how that plays out.
And what is the 144 level? What is that, like 119?
Yeah, it's 119 and a half.
That 119 and a half. Yeah. Okay.
And that's from the high in 2020 high. So it's an important one.
Mm-hmm.
And just for fun, let's take a look at what the 90 looks like. That's a 72. So this is why I was laughing about the 180, if we get down there. So that's a possibility, and you can see basis the 180, where we were trying to get above the 50% of the square, and we couldn't. We failed.
Failing. Yep, we're failing.
And that's why this area is super good resistance.
It looks like par. Here we come.
Mm-hmm. And 114, maybe this was part of it, but you can see that, taking the square 52 with three squares down, 156 is about the same area. 50% of that 52 square is up here. You see the bracket beautifully here. See that? It's pretty good.
Sure do.
So I'll leave it for next week. We can pick it up there. All right, let's move on to crude.
Violently sideways.
Again. We're kind of holding the buying's coming in at decent levels and not getting down to the 64.75 level. We even drew up a little buffer, between 60, let's say 62 and 65. Didn't quite get there. We're really managing well within the 60-degree square. Like I said, I really don't know much. I don't have a whole lot to add till we clear 73 and a half to the upside or 64.75 to the downside. In between, we'll probably just have to trade the corners for now.
What's interesting again, Barry, is it's holding in the middle of this range, and you've now got a completely different narrative. You've got peace and drill, baby, drill.
Right. Right.
Which are all bearish for price, right?
And through early September, all that talk,
was bullish.
Yeah. and we're still back in the same.
It's in the
But I'll
same
tell you what,
range.
though, I'll see if I still have that weekly chart, but there's a good weekly crude chart, and it kind of shows time is not quite up yet for
Right.
the move to start. So we'll look at that. For now, basis the daily, not a whole lot to talk about.
No.
Here's our normal crude chart, the weekly. You can see we're sitting right on top of the 60-degree level coming off the 2020 low.
Mm-hmm.
It's right there. And I just, well, we have to let time run out. As long as it's going to run, fine, let it finish up. In the meantime, we'll just wait for that to happen.
And that
Now,
240, what's that, late December, late November, early December, right?
240 happens, no, it's this month. So
Yeah,
240 is November 22nd.
right. Couple weeks.
So it's possible, yeah, because the
Mhm.
180 came up and we ran up into that and corrected.
Yep. Yep.
The numbers are working okay. So here's the chart I was talking about,
Oh, yeah.
as far as the weekly charts go. So this one, we're still intact. I mean, as far as the triangle goes, we're well within that. We haven't we're kind of in the middle of it.
Mm-hmm.
And we do have an amazing circle. So we haven't really had any acceleration, or we haven't really broken out of it. This would be kind of premature to break out here. If we break out sideways, obviously, this was just sort of a element, not
Mm-hmm.
really active at this point, and we're still stuck with the triangle. So we'll see how it breaks out. So we'll watch it. The lower part of the line of the triangle is at 64.60, and we'll see how it works out. But looking at that, you can see we're in the middle of the triangle. We still have about 3 bars, 4 bars to get out of the circle, which is another 3-4 weeks.
Mm-hmm.
So clearly time is not quite there yet. So we'll see how that works out.
It'll be fun to watch how that plays out.
Yeah. All right, let's move on to gold. We've been paused on gold, and we wanted to see if we can hold about the 216.
Remember last week those squares we had? 120 by 90 on the daily and 90 by 90 on a
Up here, right?
4 hour.
Yeah.
Yeah, they topped it.
Yep, that's right.
So we're correcting a little bit.
And 26.95, 26.96 is a level up here at the 216.
Mm-hmm.
And what we want to see is if we can, sort of get above and hold above. We tried, God knows we tried today. So if we can hold above that, if we slip below, I think there's more of a correction coming. And as long as we're below this 216, 26.96, we have to let the correction continue.
Mm-hmm.
And you'll see why we don't want to mess with this too much. You can see the weekly chart, we went up 144 degrees. And hit we went at the buffer zone. 27.97 was the target up we had, and it hit it, reversed. Pretty good reverse
Yeah,
as far as
nice.
reversals go. And it just, now that we're below that basis the weekly, you can, it's going to take a while to get the momentum back up to do anything bold. So we're just going to watch to see how it corrects and see what happens with that. Not much to do on gold at this point, but gold's had a good run. So maybe even, it's a good time for rest, a little bit of
Yeah,
a rest.
resting is totally fine.
Mm-hmm. Copper, pretty much the same story. We're holding at the quarter line. We're managing to hold right above it. Dip, little above. Even with gold correcting, we're kind of hanging in there. And we cover this every week. So we'll see when there's something actionable comes in. For now, it's also sideways.
Mm-hmm.
Not much to talk about.
A lot of the commodities are sideways. I'll talk about that.
Yes, yeah. Which means there's something coming
Mm-hmm.
down the road. So we looked at the weekly copper midweek also, and it was holding above the 144 here. And that level was 423, 424. As long as we're above that, let's just say there's hope for one more leg up, or maybe an ABCD up, which is kind of a godly setting up here. As long as we don't blow up these lows, we have X, A, B, C, and a D. So that's something that's potentially in the works for copper. So we'll see how that's panning out. Let's move on to the dollar, which is just fire lately.
Mm.
So dollar, after we we've been bullish. Well, we've been bullish dollar the entire, as far as I can remember. But after this correction, we it basically stopped in the right area. We've been bullish, and we were looking to see how we'd handle the 50% level. Obviously, we went up, tapped it perfectly, and now we're above it, well above it. What we have is two inside bars, Ben.
Mm-hmm.
What do you make of that? So if this thing gets spooked, it could definitely have a couple of nice run
Yeah.
up into the
Build
highs.
building energy.
It build the energy, and I kept saying, if we run again, we should probably check these highs and maybe do a false break. Long and behold, and I just for the hell of it, I kind of put a ABCD up here, and is right above that.
Mm-hmm.
107 a quarter is the square level. We have 107.85 as the ABCD target. So if it really heats up, we can clear the 1/3, 2/3 level in a meaningful way. And that looks like the next target. So there's that. And the weekly chart is always impressive. So here's the dollar weekly chart, and we've been, we talked about the lows here and in the old episodes. I mean, you can catch the story going back as far as we have videos. We always cover the dollar and the weekly, especially. So we were looking at the 1/3 level to be like the first place of testing, because it was also kind of middle of the triangle. And well, we managed to get well above that. And I think last time we talked about how the upward trend line is probably going to be the next target. So that's up
Sure.
in 105.66. And if we can getting through that, we have the 106.20 is the 50% of the square. So there you go. It just looks like there's more upside. We haven't had a correction, by the way, just this 1 week. Last week, we were kind of quiet, but even the quiet week, it was an outside bar. So we did make a new high. We haven't really had a big correction, but then again, when currencies run, they run, right? And
Yeah.
like this run we had, back in 23, very strong. So that's the dollar. Let's take a look at the euro, which is
Man, look how it kissed that 144 and then bam.
yeah, that was really good. And
Mhm.
these are the two numbers we've been talking about for the last few weeks. And yeah, I don't have to say much here. We came off the 108, and I think I mentioned it going, say, hey, this 109 is resistant. Let's see how it handles it. Well, it didn't handle it, reversed and slipped right through 108, and now it's in a weak position. And the 50% level, which is a reasonable next level, is 105.9. Okay.
Mm-hmm.
And so my guess is if we get there, we're probably going to take the 50% level out, especially if the dollar is going to do what it's going to do. This 50% is definitely at risk. But we'll trade it as it comes. But I think the key thing to remember is below 108 is really weak till we get to 105.9. Is that good? That's
Yeah.
good and
Yeah,
tight.
no, that's a good summation.
And the weekly is even better in terms of detail. So here's the 108 level. That's a dashed line. We had this triangle, and we talked about how this was probably a false break, and we couldn't even get to the 90, couldn't even go up and do a false break. So we were talking about how that looks weak back in the day when that was happening. And now we're below 108, same story. Long as any kind of a counter trend holds below 108, I think we're going to be bearish.
Mm-hmm.
So that's that. Let's see what else we have. We have the Hang Seng. Doing it, I'm impressed with this level, this 2380. Not that I'm new to levels holding, but wow,
It's tested that thing for 2 weeks.
it's really tested it. And I have a feeling if we don't take off here without breaking this line, we're probably going to go back and kind of wipe out the weak hands here. This
Mm-hmm.
looks more like a fourth wave trap now
Mm-hmm.
than, what I mean, like a 1-2, right?
Yep.
So I would be careful here. If we take out 2380 to the downside and break this trend line, we're probably going to go a little fishing expedition and maybe even test 19450. and then we'll take it from there. But the key level to watch is 2380. We really need to hold above it, and the trend line must be held for anything fun to happen here. Otherwise, yeah, I think the structural support, all this stuff is going to get tested. That's what it looks like to me.
That would be the criminal move, right? Come down and sweep all that up before you
Yeah,
run it.
after all the good news and all the yeah, exactly, exactly. And well, not a whole lot to add, man. Talk about perfectly sideways markets where there is an uptrend. We do have slightly higher lows coming in, and starting right about August, we have slightly higher highs coming in. So it's still not in any kind of a bull run mode like we had earlier. Let's see how much longer it goes. We'll just watch it and we'll talk about it when it's ready to break out, and we'll trade it. For now,
I mean, look at the base it's building though. Holy moly.
yeah, this is looking pretty.
2 years, two
Yeah,
years basically.
yeah, this looks good. And this is 153. This is the 50% of the square coming off the high in 2022. So that held it and is consolidating within a quarter square, very, very tight. I mean, we'll wait. We'll wait till it all sets up. Well,
Agreed.
that's all I have. Let me put it back to you. Let's cover the NASDAQ and see where things are going. Well, so much for lower highs. We took out the 208.38. Wasn't that the level we talked about earlier?
That was the key level. Yep.
And there we go. But before that, I just noticed before we tapped 2002, 20,002,
Mhm.
see that? We ran up to that square. It was a lower high. We came down hard for 2 days, and we did it inside day, sat
Inside
around,
day,
right?
inside day, inside
Sat,
day.
sat around and then took off. So it really came off with support, not like it came out of nowhere. It came out of that 2000, that
The half square here.
yeah, 20,002, right? So
Yep.
it came out of that level and bam, there you go.
Well, here's the thing that I look at. You know our party analogy in the opening where, do we get to keep partying on or is it late? To me, it looks like the NQs arrived late at the party.
Hmm.
Think about all the timing that you were pointing out when you were reviewing the S&P and the futures, right? ES futures. And we're just now making a higher high here compared to the July high,
Right into the timing.
right into that timing.
Hmm.
So is this the sort of the last leg to fall? I mean, the things that I want to point out here on the daily, there's 270 from the October 23 low right there.
Hmm.
Here's 45 from the September low.
Right.
I mean, so there's good timing in here.
Yeah, we do. We do.
In addition to all the stuff you had with the on the S&P, we've got timing here that, you know, it's pretty cut and dry. It's very black and white. As long as we're above this level, this 2838, it's
Um,
bullish.
yeah.
If we get stuck back below here, this becomes a false break.
Yes.
I mean, that's a binary. So easy market to look at right now. Above 2838 is bullish. You're looking at 21,675. Below 2838, this is a false break into timing. Could be a big move down.
Mhm. I like
And
that 90 high to high lining up there.
and you got a 90, yep, high to high. That's
When is
next
that on the
week,
13th?
14th.
Okay.
You got a 72 on the 13th,
Uh-huh.
45 today,
Yeah.
270
Hmm.
yesterday. So keep your head on a swivel.
Hmm.
But you know the level to watch. This is the key right
Yeah.
there.
Yep.
That'll tell you which way is more probable. Let's take a look at the weekly. So here's, we've had this circle so everybody could see. We lost the circle on timing, had a
Got
quick
the drop.
correction. Yep,
Mm.
got a drop, and now we're pushing right back up. And so weekly basis, the key level is this 21,082.
Mm.
If we stay above that, if we can get on top, and stay on top of that, we're going to push up to the full square here. But if we get stuck under, this is the target, 18,186.
Right.
And it'll probably be fast. So that's the key thing. This was
Mhm.
good timing. We did 90 weeks here, got a reaction.
Right.
We bounced up. Now it's just a matter of, are we starting another leg up, or is this sort of, a little false break, a little misdirection,
Mm.
unload some inventory before you come down? We know the levels that'll tell us. Weekly basis, it's 21,082. On the daily basis, it's that 28.38. Let's take a look at the monthly. We
Okay.
got another way to look at it here, right?
Yep.
Lots of timing. We had a good square here, had a reaction on the full square, right? I'm sorry, half square. From the full square up here down to the half. And now we're back up. Here's another reference point for you, 28.78. Above that, it's bullish. We sort of extend and we move up to the next square. If we get stuck, back down to the half square. We don't have enough information yet to say, what's more likely or what's more plausible. We just got to watch price action from here. Anything else you want to add on the NQs?
No, I think that's a good coverage. Good coverage there.
Yeah, it's pretty cut and dry. All right, let's look at Bitcoin. Bitcoin made new highs.
Mm-hmm.
We broke out.
Just like we
Uh,
called out last week.
we've been bullish really since this low held here, right? And then
Mm-hmm.
we started making these higher lows. See how it just captures different levels, right? Here we're there. We
Yep.
push up, couldn't make it here, couldn't stay below,
Mm.
captured this, battled at the half square.
Captured
Here's
that
where we
there.
captured it, and then we go. Now the question is, can we stay above 73,666? If we can, then it's captured and we're moving up. As long as we're above this full square, the target's just under 80,000.
Mm-hmm.
And it looks good. And you can see it even better when you look at it from a monthly basis, right?
Yeah.
Look on the monthly basis where the test was.
Right on the square.
Right on the half square and right at the old highs.
Mm-hmm.
Tested it and said, okay, thank you very much. Let's go. So you guys understand the levels now. As long as we're above monthly basis, 67,400, we're looking at almost 81,000 as your target. If we lose this and we get caught below, then it's back down in here, back down into the 50,000 level. But it looks bullish for now. Bitcoin is bullish above, especially above 73,666. Anything you want to add on Bitcoin?
No, we're fine.
Okay.
You know what they
Uh,
say, if it ain't broke,
just trade it. Just trade
just trade it. Yeah.
just trade the levels. Let's talk about the commodities now. The softs, I personally will just watching price action since the election and the Fed. Commodities aren't real happy. And the initial reaction is not really bullish. They're sort of all sideways. Sugar, cotton, cocoa, coffee correcting sideways. Gold you talked about was correcting. Copper you talked about was correcting. Silver's in a very similar position, correcting. All still bullish longer term. Same with the softs. Crude is sideways. Nat gas is sideways. So we're going to be in a period where it's going to be easy to get distracted and easy to say, oh, they're boring. They're not doing anything. But you got to stay on top of them because it's the out of these bases and out of these sideways comes the big moves. And if you don't believe me, go look at a chart of cocoa. Cocoa was sideways for years.
Mm-hmm.
And when it finally broke out, you had a massive move to the upside. And I'm not, you can't, we can't say that about any commodity yet that that's going to happen. But out of these bases come these huge moves. So while they may be boring, keep them in the background, check them every week, listen to the show every week, hear what our observations are because out of these sideways, boring, sort of frustrating moves come these massive moves in commodities. That being said, the grains look fairly decent, especially corn and soybeans. So let's take a look at these two markets. So why does this look good? Anybody that's watched the shows know how we triangulated into the low. We got the first push up, pullback gave us a higher low, and then this structure started forming, giving us, a high, higher low, another higher low, and now we got the higher high, and we're
Mm-hmm.
pushing. So if this is the first leg and this is your second leg, potential here is that we're getting a third leg forming, and third legs can be super fast moves. So what's the key level here? The key level here is this full square, which we closed just under 1035, call it. A close above 1035 and we clear it, like we push up and pull back and stay on top of it, that's your launching point. The other key marker is, can we take out this high here, which is around, call it 1070. Here, minimally you're going to do an ABCD. If you take that out, again, what we're trying to do is catch that fast third move. And taking that out with the higher low in place gives us the, possibility and higher probability that that can happen. So that's your daily. Let's take a look at the weekly. Weekly looks good.
Mm-hmm.
Had a nice big up bar this week. After an inside bar last week. And again, there's that Barry technique, the inside bar technique, right? We had
Mm-hmm.
an inside bar last week. As soon as we took out the high of this inside bar, boom, you got a big move. Here it's pretty obvious, the half square, which is also coinciding right with this previous, high that we pulled back off of, is in that 1060 area.
Mm-hmm.
We take that out, we can move, right? Then that opens up the full square, which is around 1282. So the weekly looks good too, shaping up. And here's your monthly. The monthly is very interesting because we're holding this level multiple months, right? 1, 2, 3, 4 months we've been testing this level here. And that's at, let's see, it's a little under 1,000. It's around 985.
Mm-hmm.
As long as we're above that, we're pushing to the half square, which is 1275. So this chart, you can see how once the low comes in, you get the first push up, then they all start sort of creating the picture of a bullish pattern. And that's what, in my opinion, what we're seeing in soybeans.
Mm-hmm.
Anything you want to add here?
No, it's very good. It's now we know what the level is. It's really important, that 36. So, and it looks like it wants to hold. We have structural support. We have degree wise. It's a good measure coming off the low.
Mm-hmm.
Yeah, we're good.
Okay. All right. The next one we want to talk about is corn.
Mm-hmm.
And the good news with corn is it's already ticked above that high. Today's high was like a half a point higher than that high. So we have a low, we got a high, we got a higher low, and now we got a higher high.
Mm-hmm.
And this could be like the preview of what soybeans is doing, just hasn't gotten that higher high yet.
Right.
But this is the pattern. This is the pattern that we looked up. There's your first push up, there's your first pullback. And now it's starting to curve like it wants to do that, that fast third move.
Hmm.
And that I don't know what the fundamentals are. I have no idea what the news is going to be, but this is a sign of accumulation. What's the sign? A low, a higher low, a high, a higher high. So that's the daily. Let's look at the weekly. And this is how you try to capture a level, right? You push up, we got above, pulled back, battled at the level. Now this week price is completely above that 412.
Yeah.
So
Big
that's
move.
how that's how you capture level. So What's the next target as long as we stay above that 412 on a weekly basis? It's 517, the half square. Broke the downtrend line, back tested it here. And now
Mm.
we're riding the one by one nicely on the way up.
Yep.
And there's nice, time counts from high to low, 120,
Hmm.
high to low, 120 weeks. Let's take a look at the monthly.
There you go.
So we have 3 months up already. If we can keep pushing and get another month up, that's a really good sign for this.
Hmm.
Uh, the other thing to notice why this full square is going to be so important. Look at that consolidation, basically a 6-year consolidation from 2014 to
Yeah.
2020.
Yep.
We can get up and sit on top of that. That's the launching pad, monthly basis. And just for a bull market, like low to high here was 90 months.
Hmm.
If we go low to low here to high, puts us into January of 2028. That could be your bull market high if we do a 90-month.
Not bad.
And that's it for the commodities. I mean, like I said, they're light because we're dealing with a lot of sideways corrections. We're also dealing with a strong dollar, which puts pressure on commodities. Um, I guess the topic I wanted to talk with you about today, Barry, was when you're in this period, like where you have all this kind of outside influence. Like this week, we had major elections, we had the Fed. How much do you put in terms of emphasis of price action during that period? Do you discount it? Do you pay more attention to it? How do you treat the price action in these periods of high emotion?
Well, I've tried over the years, I've tried every angle, you know, like
Mm-hmm.
what's the best place to be? At least you're talking about the state of your mind, right? The mental
Right,
state.
right.
And how do you handle your analysis along with that? I used to be, when I first started out trading, I would try to catch up on all the news, everything. Not that we had a whole lot back then, but we tried to catch up
Right.
on, be on top of everything. Then I realized, well, that's just not going to work. It doesn't matter. No matter what the news is, charts do what they're supposed to do. The patterns, probabilities always win out. So then
Mm-hmm.
I went through a stage of no news, no TV, no nothing,
Right.
not watching or reading anything but other than the charts. And so that was okay. That was better. But then I noticed, then I would miss certain things. Like I would miss the importance of it. What I missed was the sort of the collective, what the
What the
masses.
mindset is. Right. Right.
Exactly. The sentiment. I was missing the sentiment because, yeah, you can look at the charts, but you don't know the future sentiment, what's happening at any different level. And so then I went back to just to bring enough of it in to help me sort of understand the sentiment and what news things might be. When I say sentiment, I mean how news is affecting the collective,
Mm-hmm.
right? And so that's kind of where I am. But that took a little bit of a trial and error because you want to keep it at it. You don't want to like sort of bring it in too close, but you want to keep it at a distance just to sort of keep an eye on it. You don't want it to be part of your analysis, but at the same time, you don't want to.
You want to be aware.
Yeah, it's just to be. Yeah, exactly. And you don't want to. It's not something like you want to just throw it out the window into the trash. You want to keep it at a safe distance so it doesn't influence you. It doesn't pull you into the collective influence, but you can sort of watch it from a helicopter view. So you can monitor what's happening, just like you're monitoring charts, but monitor the collective stuff through these lenses of news and elections and FOMC and all of that, but not get involved in it, right? And
Mm-hmm.
then the thing you're involved in would be the charts. So I'm still strictly with the technical analysis, but I do keep the fundamentals and news and all these other things that are happening at a safe distance. So I kind of have a reference point for that. Without that, sometimes you kind of, it gets a little foggy. Charts might be fine, but you don't know, sometimes I'll tell you where it helps. It helps when, well, just like how people use sentiment, when is it too bearish? Are they too bullish?
Mm-hmm.
You
Mhm.
know, is it too cheerful? What's in the news and how are they? When you see what's in the news, you can kind of see what the collective is doing on the charts, right? Because it represents that's their expression of it. So so I try to combine the two in that way. You know, it's a little bit of a I don't know if that makes sense, but it's a little bit of a careful
I could summarize for you. It's you want to be aware of it. You don't want to buy into it.
exactly. Exactly. You buy into your own work, right? The technical
Right.
stuff.
Right.
And the other stuff, yeah, it's for awareness and also awareness means it's feeding you some amount of level of data that's going to help you have a better understanding of the whole, the bigger picture.
Well, and I think the other thing for me, it also is being aware of it, but having the technicals be in the front and the geometry and the levels, you know when a level gets violated, if it's against where the collective mindset is, it's going to cause a really big reaction,
Yes, exactly. Yes.
you know?
Mm-hmm.
So having that, the understanding of because when, I mean, if you look at the press, or this week is a perfect example, everything was, oh, this is the end of the world. This is the beginning of the world. It's just been all over the place, right? With
Right,
the
right.
and it's been sort of this apocalyptic theme.
Mm-hmm.
And when, the sun came up on Wednesday and everybody was saying, oh, it's going to be the end of the world if this happens or if that happens or whatever. And it didn't. You could see the relief. I mean, the volatility got crushed and the markets took off,
Yes, exactly.
right? And so being aware of that can help you sort of know that when a level gets breached, gives you a better idea of the energy behind it because of people being caught off sides.
Absolutely. And you know that the 30-minute chart that we run kind of helped at that 59.20 level that we talked about.
Mm-hmm.
Um, how that held. And we know if it's coming off of that and people are fearful. And that's exactly what happened, right? It was kind of
Yeah.
a trading out of there very carefully. And then when things were uncertain, the markets took off and we knew when the level gets taken out, it's going to continue to go. So
Yep.
it all worked out nicely.
Well, listen, everybody, we appreciate the support. Please continue to share the links to help us expand the channel. Rest up this weekend. It's been a long week. I know I'm going to rest up this weekend because next week we're back at it, and there should be a lot of action based on the timing and the next Rebel Yell cycle hit. Things should be very, very active again next week. So, great job, Barry, and we'll talk to everybody next week.
Thanks, Ben. Good job. And we'll see you guys. Well, we'll see you next Friday, but also the midweek drop.
Yeah, we'll see you on the round robin speed round on Tuesday, Wednesday.
Yep. All right.
Take care,
Bye.
everybody. Bye
Bye
bye.
bye.